Anxiety growing here in Metro Detroit over fears that the trade war could have a huge impact on your wallet. Wall Street, tough to watch today as we know the Dow dropping 2,200 points to finish off the week. It's the second day of huge losses on Wall Street following Wednesday's new tariffs on U.S. trading partners by the Trump administration. And as we hear from so many of you, we reached out to Michael Masserant, joining us now, financial analyst and instructor, and we appreciate your insight on this, Michael.
Of course, happy to be here.
Thank you. As we were just talking, some people need to worry more than others. I mean, it's concerning, but not for some as much as others.
For sure. So this, to be clear, has been a pretty ugly couple days on Wall Street. We have not seen volatility and losses like this since the COVID crash, and people are now starting to panic to see, okay, how much further will this really go? But one thing that we always try to remind people, especially people who are 10 plus years from retirement, if you're 10 plus years from retirement, this is a buying opportunity. The market will bounce back. It might take 6 months. It might take 2 years. No one knows, but it will bounce back. Now, if you're closer to retirement, it's really important to have safe buckets of money to carry you through these kinds of things, because we're going to have market events, maybe not tariff related, but market related events that happen every 4 to 6 years in retirement. So it's important to have safe buckets of money to carry you through those things.
So what's one of the first things we need to do looking at this historic drop take place?
So number one, just take account of what do you have coming in versus what's going out. If you're 10 plus years from retirement and you can afford to crank up your 401k contributions, crank up the 401k contributions. This is a buying opportunity. If you think you may need to protect some dollars that you may need to spend in the next 1 to 3 years, you might want to consider taking some risk off the table.
Wow. And what could these tariffs, do to the economy,
So the long-term goal for the tariffs is to sort of balance trade negotiations with our trade partners and to bring manufacturing back home to the United States. Those are the long-term goals. They may work, they may not work, but in the meantime, there's going to be some short-term pain. The administration, the Trump administration itself, has admitted they expect some short-term pain in the meantime. So this is not a surprise to anybody. They're banking on the short-term pain being worth the long-term growth in the economy.
Short term as in?
It really depends. It depends on how long other countries wait to come to the negotiation table.
Wow. So are you getting the panicked phone calls, or what are you hearing from your end?
So really, it's trying to make sure people understand the long-term game plan. For the dollars that they're not touching for 5, 10, 20 plus years, I know it's not fun to see the red on the screen, and there's some panicked articles and people are starting to get nervous, but those long-term dollars have time to recover. This too shall pass. If we're spending the dollars sooner, then we might need to pull some risk off the table and protect those dollars.
In the meantime, dollars going up on our basic, household items and things, so that's why you're saying important to have a reserve.
For sure. This is another reason why people need to have that 6 months of safety for cushion for things that might happen, because this likely will cause some inflation along the meantime. They're expecting new car prices to rise by roughly $12,000 because they're paying higher costs to bring parts into the country to build these cars. Now, over the long term, they might start producing the cars domestically, bringing the prices back down. But in the short term, people still need to go get groceries and buy cars if they have to. So that might cause some inflation. We really need to be tight on our budgets to make sure, do we have enough cushion in the budget in case there is inflation down the road?
And quickly, before we go, interest rates, any effect?
We'll see what the Fed does with interest rates. If this causes some economic hardship, then they may cut interest rates to try to support the economy.
Well, that would be one bit of good news.
It would be.
All right, Michael, thank you. We really appreciate your expertise.
Of course, happy to be here.
All right.